Well, I've got Larry Goldberg back today, as promised, and we're going to talk about something that is really got Larry's goat right now. He's up in arms. He can't believe it. Larry, glad to have you on board today.
Great to be here, Randy. I should also explain that I'm on the road.
That's right. Yes,
I'm in Brownsville to visit Starbase.
you're at Brownsville now.
Yeah, I'm in Brownsville right now, and I'm going to go down to Starbase later this afternoon and in the evening. You know, it's an exciting time because they're only a week or so away from a launch.
Yes.
And unfortunately, I'm not going to be able to stay the whole week unless I give up the conference, which I don't think so. There'll be many launches. There'll be many launches. So this is going to be a famous one. This is going to be one for the ages.
and
Anyway,
and you never know what's going to happen on the day. Of course, it could happen
yes,
anytime.
yeah, yeah.
Well, Larry, I was thinking this more. I actually threw this up on a video a day or so ago. I put one of these data points up the other day, and today I was thinking, I thought about five other data points just for fun, and I'm going to throw these out to you. And I know I think you have a response to this. So it turns out that Tesla was up 1.5% in September.
Right.
And the NASDAQ was up a little less than 1%. So the Tesla beat the NASDAQ for the entire month of September.
By the way, which is its beta 1.5. So
Okay.
it's good.
And then year to date, Tesla's up 137%. So that's a pretty good deal.
Yeah, yeah.
Now, if we go back a year, it's down 25%. But if you go 2 years back,
Which is not bad considering what the market's done in the last year.
in last year, yes. If you go 2 years back, it's up 2%. Now, that would be a terrible return on investment.
That
Right.
would. Yeah.
Now, if you go back 3 years, it's almost dead even, almost to the dollar of what it was
Terrible.
2 years ago on September 1, which would not be a good return on investment either. Unless you go 5 years back, now it's up a 1,300%.
Right.
So it kind of depends on when you got in as to whether you're happy or sad.
Well, you know, this whole business of being happy or sad for a given point in time in a share, you know, really gets me fired up. I have to say, retail investors, you know, they measure everything with the daily share price. Their mood, their anguish, their attitude to Tesla, everything's measured by what happened at the opening bell this morning on Tesla.
Even some professionals seem to get really, really mad at Elon.
Even
over the
some
share.
professionals. Yeah. But, you know, I wrote a note, actually it was in a DM to a friend in a chat group who was complaining. What he was complaining about? He was complaining about the price increase, the price reductions of the S and X, and said, yeah, and I think they did it in a way that, you know, people wouldn't see it because they were worried about what it would do to the share price. And I kind of exploded at it. I wrote this note. Can I read it for you?
So let me just, before you start reading the note.
Yeah.
So I've been in PR. I've been doing PR pretty much over 50 years now for every company I've owned, for other people's companies,
And for yourself.
for political events. I mean, I've been doing PR for a very, very, very long time. And you never release anything on a Friday night.
Right.
Because nobody's going to read it. And preferably you don't even release anything on a Friday. So if Tesla is so tuned into PR that they did the S and X release the pricing on actually Thursday night going into Friday, but then they released the new Model 3 Highland on Friday. So no, I don't think they're paying any attention to PR release dates. Otherwise, they would have done the Model Y on Tuesday of next week.
Right.
Weekend.
Right. You know, it's just
Model 3, I mean.
the Model 3, the Highland,
Yes.
which some said never existed, but okay, we won't wag that tail. No, so I I wrote this note and I'll read it. I said, I strongly, strongly doubt that Tesla has any motivation to bury the SNX price decreases. What could possibly be the motivation for that? It's all about growing or defending market share, particularly with the IRA being within reach. They're putting the SNX into a category where the IRA is within reach. The FSD pricing seems simply to grow in adoption and expand margin for attempting price discovery. I said, I don't believe they take a single pricing decision with any reference to the stock price. We look at every decision they make. We, retail investors, tend to look at every decision they make from the perspective or through the lens of the stock price. Yep. And retail investors, they wake up in the morning, they check the pre-market, and if it's down, gloom and doom. If it's up, hey, victory. I mean, it has nothing to do with where the price is going. I mean, 5 years ago, if you had put $1,000 into Tesla stock, you would have $1.3 million worth of Tesla stock.
Exactly right.
I have little doubt that if you put $1,000 into Tesla stock today, you'd have over $1 million within 5 years. In my view,
that's not investment advice.
It's not what I'm telling you to do. It's my belief.
Yes.
But between now and 5 years' time, you can see that thing go down to $100. Depending on the day, depending on the news, depending on, how Elon tweets. It's got nothing to do with look, I've said it often. I was an investor in 1999 in Amazon stock. It may be 1998, but anyway, very early in Amazon stock. I watched that sucker steal my money, go down to, a fraction of its worth. I think I can remember 3, 4, or 5 occasions we were down 50%. How did I score? I did extremely well. Extremely well. It's the same with the Tesla stock. I mean, when the Tesla stock was sitting at those nosebleed levels, I didn't believe the number, but I didn't sell. And people say, oh, if you'd sold, blah, 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 blah. Now the truth of the matter is I did hold leaps. Mm-hmm. I did sell leaps, not at the very top, but I sold leaps because of the timing, requirements of the leaps. The imperative of the leap is you sell it well before expiry date, or you're going to convert it. And we converted some and we sold some. And I'm a buyer of Tesla right now. I'm a buyer of Tesla right now because I regard this as a very good time. Before the launch of the Cybertruck, while you got a refresh of one model and another refresh of another model coming up, and the truth of the matter is Tesla only has 4 models.
Yeah.
Most OEMs have somewhere between a dozen and 4 dozen.
Yeah.
And if you go to Volkswagen or Toyota, you're at multiple dozens. So their refreshes, which always cause a dip in the sales of that particular model for a while and a price drop, and before the new model comes, and all of that stuff, you don't notice it. Or at quarter end, they'll say, well, this month's quarter, we lost a few points because of the refresh. With Tesla, it's a big deal. But no executive, no good executive of a public company makes decisions based upon stock price. We look at our earnings. We optimize for earnings over time. We optimize for growth. And if you're Tesla, you optimize for innovation and you optimize for rapid innovation over time. yes, at the quarter end, you'll push every possible deal through. Why? Because you want to grow those earnings. You want to grow those revenues. You want to set a bar for the next quarter and the one after it. That's what you do. And ultimately, the share price is what is going to tell you whether you made a good decision or a bad decision 6 years ago, or 5 years ago, or 3 years ago. Graham, the great investor, said that in the short term, the share price is a voting, the share market is a voting machine. Did you do good? Did you make a good decision? And how many people think you made a good decision? How many? But what's important is that in the long term, it's a weighing machine. It weighs the real value.
And I've noticed, Larry, I've never been as focused in my investing career as I have been the last 7 months, because now I have not only the obligation to my own portfolio, I have an obligation to my audience to make sure that I'm bringing them absolutely the best information I can possibly bring. And in doing that, what I've started to know, I've noticed this years ago, but I didn't know it was across the market. The market almost always gets it wrong in the first hour.
Yeah. Well,
even the first day. And then
particularly with Tesla.
Yeah, but if it's across the board.
It is across the board. I mean, retail investors tend to react. Look, all investors, who are sitting on a position that may not have properly thought through what the company is going to announce, or what the company is going to do, or what the results are going to be. In the first few seconds after they realize, oops, they will take action. They will respond.
Right.
That's the worst possible time to respond. The worst. So, and Tesla has got such a huge proportion of its price impacted by option action, and that is, the calculus behind the impact on the share price of option action is almost impossible to judge. Look, I made a little bit of money in the last quarter end. I think we spoke about it while I was doing it. I sold short, before the quarterly. And I bought some puts, and did very well out of them. And I sold the next day. It was down 10 points. I sold. Later in the day, it was down 20 points. My brother said to me, "Oh, we missed it." No, we did extremely well. We got it.
You never ever cry over a profit.
I mean, but you can never explain this to non-investors. My brother, who, he's watched me over the years manage his money, and for a doc, he's retiring extraordinarily well. I mean, he's done so well with his portfolio. Actually, I've done better for him for his portfolio.
Yeah, for your own.
but and he's, I tell him these lessons, but you never, ever learn. I mean, your reaction is the gut reaction. Oh, we made 10 points. It's X amount of dollars. We could have made 20 points. Think about, what the stock.
So, Larry, I had a commenter on YouTube the other day send me, a comment saying, Randy, it sounds to me like it'd be better to be in leaps. You can make more money in leaps. And I said, well, I got to tell you that the year that I was a day trader for a year doing leaps. I made 33 times my investment, my initial investment. I made 33 times in a year. You don't do that very often. But I said it wasn't worth what it was doing to my heart. Day trading options is like, you might as well, I mean, holy,
Also, leaps are very dangerous because
very dangerous.
if the company drifts for a year or two,
Yes,
you just lose everything. You just watch it go down day after day after day after day. If you buy leaps, you have to be very strategic about it, and you have to be absolutely bloodless. I mean, you got to decide what you're going to do, what you're going to, and you got to execute. And, it's the only way to do it. So, I'm not, look, I am very personally, for myself, I shouldn't even say this, I'm very fixated on these 2006 leaps. I own 2005 leaps. I'm very fixated on these 2006 leaps.
2026.
At 26.
Yes, I do this too, Larry. I think it's an age thing. Sometimes I say 1976 or something.
It's an age thing. Yeah. What were we talking about? What were we saying?
Yeah, the 2026. I'm going to redo my video on 2026. That video got tremendous response. Yeah. I think 2026 is really the year. That is the time I think that we can all think of today that by 2026, everything will be done. The robots will be done, FSD will be done, robotaxis will be done, all of it will be done.
Halt. This is not an investment advice, and the risks are very high.
Yes.
Okay, so guys, don't run away. Firstly, the leaps are not out yet. I think a little bit later this month. It's the second.
Today's.
They'll be actually trading them, in a very short period of time. I forget exactly when, but it'll be this month, and there'll be 2026s. But we could be going into a recession, and the recession could last for 3 years, and it could be very tough. And every penny that you put into leaps at this point could be in dire trouble.
Yeah, I tell folks, in leaps, you only play what you 100% wouldn't even care if you lost.
Thank you.
Yes.
Thank you.
You wouldn't even care. It's not that you can afford to. No, one step higher. You wouldn't even care. Be like, oh, well.
Yeah. That horse didn't come in.
Okay. So anyway, I'm a big believer. It's not that I'm pushing off. I mean, but 2026 is only 2.5 years away. So it's not that I'm pushing off Tesla's future. I believe Tesla will have an amazing 2024. I think they'll have an amazing 2025. I just think that if you start doing an analysis, a risk analysis, let's say on Optimus, well, maybe it's a 30% risk, 30% chance that it'll be a factor in 2024.
Right.
Maybe it's a 50% risk that it'll be an opportunity for 2025, and maybe it's an 80% opportunity for 2026. So as you get further out, because the nature of the product, the likelihood of it being a factor becomes greater and greater. Well, I've done a bunch of analysis, and Elon has said it. The rest of everything else that Tesla is doing pales compared to Robotaxi and Optimus. The numbers they're just exponentially different than what it is when you're trying to move metal. A
word of caution. The leaps that will start trading this month are for March of 2026.
Yeah.
You probably are going to have to sell those or start wanting to trade those, mid 25s.
Oh, yeah.
So you're not buying 26 leaps because of what's going to happen in 2026. You're buying 26 leaps because of what's going to happen in 2025.
Well, and again, as the market perceives, always thinking out 6 to 18 months, as the market is perceiving what's going to happen in 26 and starting to build in the pricing based on earnings in 2026. So yeah, I agree with you 100%. And that's another thing people do. We're not going to end up doing an entire program here on leaps, but if you're trading leaps, if you're not just trying to do leaps in order to actually use them for their purpose, which is to eventually take delivery. If you're trading them, you're always, and you're doing leaps, you always want to get out, either get out or, like you say, trade to another 2-year out or 3-year out. You want to stay out as far as you can possibly stay out, because there doesn't seem to be a huge benefit to being in something that's 1 year out or 3 years out in terms of the price action on a daily basis.
Yeah, I'm buying 26 leaps because I want to buy stock.
Okay. All right. Yeah.
And I am buying stock, by the way. I'm accumulating stock at the moment.
Yep.
But I see these 2026 leaps. I think the timing and the pricing is just very good. I lost a fair amount of money on leaps towards the end of last year.
Yeah, mine was 2 years ago.
Yeah. But the amount of money, and then early this year I bought small leaps, 2025s, and did so far, touch wood.
Yes,
they're pretty good, and I think they're going to be great.
Yep, me too.
Yeah. And
so I think, Larry, if we wanted to summarize the nature of this particular video, it's not really about leaps. It's really about how to think on a day-to-day basis. And I think that, and maybe one more thought before the summary. So first of all, it's to understand that the owner, the ownership, the management, the board of directors, the CEO, the CFO, et cetera, are generally almost never, if they're any good, thinking about the stock price when they make decisions. They're thinking about the overall long-term benefit to the company of the decisions they're making. Sure, they're thinking about the long-term stock price because that's going to benefit from what happens with their actions today are going to affect the long term.
And Randy, it may not only be a long-term decision. The management may have to think on the very short term.
Short term also, yes.
Yeah. But anyway, the point is that they're making decisions not because of what they think the stock price can be.
Right.
They're making decisions because of the benefit to the company. And if you have any doubt about this, I wanted to add one word.
Yeah.
Read Elon's letter to his SpaceX employees on why he wasn't going to take his SpaceX public.
Yep.
The most fantastic letter. I'm going to dredge it up, and I'll send you a link to it to add to the show notes, because it is really it shows the mindset.
Of course.
And that mindset is what he's trying to transmit to his employees. And I would strongly, strongly commend that mindset to investors.
Right.
Investors.
And then what I was going to say is that alternatively, what a lot of folks don't think about is the mindset of the investing public, because people tend to project their own mindset onto everybody else out there. In the particular case of the investing public, the range of the mindsets is crazy big. You have conservative investors, you have very crazy investors like me. You've got that are just wild and crazy. Even you have people that are old and they're like us, and they're thinking about their portfolio in terms of holding on. You've got 20-year-olds who are thinking about making a buck this weekend. I mean, you've got the institutional investors who are thinking about what their quarterly return is going to, what their quarter numbers are going to look like, so that more people will dump money into their funds. I mean, you have people all over the place,
and
minute by minute basis. Oh, and electronic trading.
And you have grandfathers like me who are thinking not only about their grandchildren, but thinking about their grandchildren's children, the next generation.
So. Right. Yes. Yeah. Building what they call intergenerational wealth. So as an investor, you have to. It's really, really hard to think about the breadth of the investing public and how they're making decisions on any given day. And I think this really shows up on reporting days. So when you have a day like the PCE, or you have a day like the employment report yesterday, or Friday, whenever, I don't know which day this is going to be out, and you see that the report comes out, And in even the pre-market trading, people are making instantaneous decisions based on the very first headline they see. And then as the day progresses, people start to analyze it deeper and deeper, looking at the numbers more carefully. And then they start seeing the reporting and more headlines, and you see more changes in the way people are perceiving that report that day. And then by the end of the day, it could have completely flipped from where it started out in the morning based on the analysis.
And the macro is changing all the time as well because of, some stupid Fed chairman may say some stupid thing. Anyway, that's another subject.
So that's actually, we did that story yesterday. So
Yes.
if you didn't see it yesterday, I'll put a card right up here to go see what Larry had to say about the Fed chairman. That's
Or not.
Oh, no. Yeah. Anyway, thank you so much, Larry, for being on. And, and to all of you out there, it's been great talking to you. If you don't mind, I do want to pitch my little device here. I have these little devices for $25. You can't believe how cool this is. Look at how thick the stainless. I mean, holy mackerel! It comes in a camo as well. It's a can opener. I mean, I'm sorry, not a can opener, a bottle opener. So you got your bottle opener here too, and it's got a magnet on the back, so you can slap it up on your fridge. I mean, is this good or what? So anyway, you just send $25 to my PayPal account. It's down in the information below. Just click on there. You can send it 20. Now, if you're out of the country, I got to charge you an extra $20 for freight. So, or if you join my Patreon, I'll give you one at the $10 level. I'll give you one for free.
Click the link below to get your paperback, Kindle, or audiobook now.